Our traders at Access Bank expect FAAC and coupon payments to boost market liquidity as buying interest is sustained in the bond market, especially on the 2028 paper. Bosun Obembe, Treasury team member at Access Bank, joins us now for a market update. Bosun, it's a pleasure to have you on the program. There are two issues I really want to touch here. The first point is on the liquidity issues. I just mentioned FAAC, and clearly with the adjustment of the rate, that should pump in a lot more liquidity. Can you just begin to give us a sense of the quantum of that and its impact in the short term?
Okay, thank you for having me. So just like you mentioned, for next week, we are expecting about 907 billion as a FAAC payment. Like you rightly mentioned, when you have too much money in the system, then you worsen the inflation, right? So currently our inflation, the last time the figure was published was 21.79, which is quite lower than what we were expecting, and the MBS even mentioned it, that they will expect the inflation rate to actually go up, because expectation was the impact of the exchange rate unification and the removal of the subsidy. So it should have significant impact at pushing up this inflation to at least we're looking at 25 to 30% levels. So, and what we've seen is even the fiscal side, they're trying to like control the inflation. So the revenue that accrued into the federation account for June was about 1.9 trillion. So in order to reduce this inflation, which is expected in the next figure that will be published, so it's only about 900 billion that the state will share. Before now, the market was awash with liquidity, and if you look at the CBN stance in terms of reduction of CRR for the merchant bank, which will actually bring in more, because before now the merchant bank, the CRR ratio is 32.5, the same thing with the commercial bank. But now what we've seen is that the CBN is reducing the CRR to 10% for merchant bank, which will further bring in a lot of money into the system. And what we've noticed again is the way the CRR is computed for commercial bank, which is now scientific. So with all of this, it means that there will be so much money into the system. And what will take out the money, which largely is usually FX, we don't have the FX is there. Right. It's quite not there now for now.
Okay, speaking of FX, that leads me to my next question, and that's around this demand buildup that many are suggesting is huge, and I imagine it must have even grown over the last couple of months. It's always difficult to get a number on that, but can you just maybe give us some estimates in terms of the extent of that demand that is just held up in Nigeria right now?
Just like you said, to get an accurate estimate is a bit of challenge, but I think, as you know, we are import dependent, so we import so much. So for every day, the demand keeps building up while the supply is not there. What can actually increase the supply is the FPI. And if you look at the current yield in the money market space, for last week, when we opened the market, was about 1% trading. Treasury B rate 1 year is trading around 6% levels. So as a result of this, you will not see this FPI coming. So I think if by way of estimate, I think the demand could be up to like maybe $2 to $3 billion demand, while the supply is not there. But thankfully, the CBN has actually been coming to the market to supply, but that is not sufficient. We still need the FPI to come in to boost the liquidity.